In rare occurrence, both economic and political forces joined forces to provide a strong positive sentiment in the market, due to which financial markets across the world ended with a gain. But Indian markets, however, ended with a small decline due to fall in some heavyweights, and oil markets also witnessed decline after OPEC decided to continue its production cut, as demand outlook is not so great. Good morning everyone, this is Shaurya from Market Times and you are watching Journey of Financial World Around the World. US and European stocks closed with a gain on Thursday. In European markets, FTSE closed at 7,344, DAX closed at 12,410, and in US markets, Dow added 45 points to close at 27,182, S&P closed at 3,009. In Asian markets, we are also seeing a positive trend today, and due to trade war and stimulus by ECB, mood is lifted. Nikkei is trading at 21,900 and Shanghai is trading at 3,031 with a gain of 22 points. In a widely anticipated move, ECB gave the market what it was expecting: the reduction in rates by 10 basis points, which brought its deposit rates to minus 0.5. And it also started bond buying program to buy a bond worth 20 billion euros from November, but main refinancing rate has not been touched and it is still at 0%. Main refinancing rates are the one which ECB charges from the bank on borrowing money, while deposit rates are the one which banks receive on depositing money with the central bank. So bringing depositing rates down means that banks will be charged more if they deposit the money with ECB. Buying back of bonds will infuse more liquidity into the market, which will rev up the inflation. Currently, Europe's inflation is just 0.9%, while its benchmark is around 2%. It's not just the action, but also the message that key ECB interest rates will remain at current level or lower unless inflation reaches close to the benchmark of 2%. So actions along with this statement give a boost to the market, and as noted earlier, it was positive. But it should also be reminded that as interest rates are very low, this can also impact the deposits in the bank, and which might impact the profitability of the banking companies. On trade war front, it seems more progress is in the offing. After increasing trade tariffs, it is also reported that China may provide relief to US agriculture sector, which is a strong political base for Donald Trump. Bloomberg reported that China may allow its companies to buy agricultural products from US farmers like soybeans, pork, etc. However, analysts believe that these actions by both the countries won't create much impact. But we should not forget that this is actually a change in stance. And moreover, baby steps may set up the stage for bigger move and possibly a resolution in the trade war before the elections. Just a thought, if Trump successfully resolves the tension with China before 2020 elections, then he will have a pretty good chance of becoming president again. Economic data from US also pointed out that economy may not be as bad. Core CPI for the year increased year on year increased 2.4%. while Reuters poll expected the rise of 2.3%. Overall CPI month on month increased by just 0.1%. And in another news, weekly jobless claims in US fall and more than expectations, which is again a positive sign in the US economy. All this points towards the good news, but markets still expect that Fed will cut the interest rates next week. All this provided positive momentum in the market, and then development of trade war front appeared one more, when it was reported that US might consider interim trade deal with the China, and this sent stock markets even higher. But later US officials clarified that there is no consideration of interim deal, and that brought down the market a bit, but it still remained positive. Retail inflation in India however rose to 3.21% from 3.15% in August, and food inflation was 2.99% against 2.36% last month, while IIP, which is actually factory output for July month, was 4.3% as compared to 2% in June. Infrastructure output actually saw increase, and it increased from minus 1.8% to positive 2.1%. So this was a good increase, and it somehow showed that condition of infrastructure sector improved to some extent. It is needed to be seen whether Indian markets will also take global cues and improvement in factory output positively, and will trade today with a gain, and how they will close, it needs to be observed. Yesterday however, they closed with a loss. Sensex and Nifty both ended with a decline. Nifty went below 11,000 to close at 10,992, while Sensex closed at 37,104 with a loss of 166 points. Nagarjuna Oil and Shekhawat Poly were the biggest gainer on NSE, while ATN International and Visgar Polytechs were the biggest loser on NSE. Yes Bank and Idea Cellular were the biggest mover. Yes Bank stocks fall by more than 5%, while Idea Cellular decreased by 3.48%. Shares of Tata Motors also fell by 4.5% when it was reported that the global sales of company saw a decline of 32%. Fall in all these stocks led Indian markets to close in red. Rupee, however, continued picking up, continued its strength and closed with the 6th day in a row with the gain. Rupee saw quite a gain and closed at 71.13 after it closed at 71.66 yesterday. Improvement in global sentiment provided support to the emerging market and rupee followed the cue. FPIs were again net buyers on Thursday and infused rupees 266 crore in the Indian markets. As India is huge importer of oil, so fall in oil prices also acted in favor of rupee. So now let's look at the situation of oil in Indian market and global markets. Oil prices closed with a decline after OPEC decided in its meeting that it will continue the rate cuts, as demand outlook is not so positive. Also, it urged Iraq and Nigeria to comply with the production cuts. Currently, Brent is trading around $60 per barrel and WTI crude has fallen below $55 per barrel. Iraq has produced 4.8 million barrels against their target of 4.5 million barrels, while Nigeria also produced 1.4 million barrels per day against their target of 1.6 million barrels per day in the production cut deal. This decision was actually taken to prevent the oil glut, which might happen as US is ramping up its production. Earlier in the day, IEA reported that in its monthly outlook that for a brief period, US actually become top exporter of oil in the world. IEA added that the boom in shale production made US top exporter in June, when it exported more than 3 million barrels per day, which is even more than Saudi Arabia, and acquired the top position of oil exporter. Although OPEC in its monthly outlook has reduced the growth in it, and according to them, the oil will increase by 1.08 million per barrels next year. But IEA has kept its forecast for demand growth in 2020 at same level at 1.3 million barrels per day. However, this forecast is based on assumptions that there will be no escalation in trade war and geopolitical tensions regarding Iran will also ease down. Production cuts by OPEC and Russia is one of the major reasons why US reached the top position. All this sent oil prices in downward direction. Now let's talk about the gold. Gold on the other hand increased a bit, but as a result of rate cuts and closed yesterday with a gain. And currently gold is trading around $1,504 per ounce, while silver is trading above $18.1 per ounce. As rates reduced, the yields on bonds are also expected to fall, and that will make risk-averse investors shift towards non-yielding safe haven, which is none other than lustrous metal, gold and silver. Since economy is still in slowdown and political sentiment can change within an instant, so economic and political uncertainty still weighs heavily in the market, so more and more investors are becoming risk-averse. And in low bond scenarios, they are expected to move towards the gold, and that's the main argument for bullish trend in the gold. That's it for right now. Bureau Report, Market Times TV.
आपको अगर हमारा वीडियो पसंद आया है तो इसे लाइक करें, साथ ही YouTube चैनल को सब्सक्राइब कीजिए और मोर अपडेट्स जानने के लिए बेल आइकन को दबाना न भूलें।